Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. There is a confusion going on in US market with respect to interest rate. Trump is saying the Fed chairman that go and cut the interest rate, while the Fed chairman says that I'm not going to cut interest rate drastically in coming days. Both of them have the different perspective. Let us understand why both of them are saying and what are the logics for the same. And then in the second part of the presentation, we are going to give why the Fed is going to cut interest rate, what will happen to dollar and US equity market, and finally outlook on rupee. So let us first start with Trump's point, why Trump wants to cut interest rate. The first reason why Trump wants lower interest rate because US debt has increased drastically in last couple of years. Currently, interest payment what they are doing is close to 1.1 trillion dollars. 4 years back, it was close to 482 billion dollars. Trump understands that if Fed reduces the interest rate, then their interest payment will go lower. Trump logic is that manufacturing sector used to keep 45% of US employment in 1945. Currently, it is at 9%. He thinks that if Fed cuts interest rate drastically, it is going to weak make the dollar weaker. If dollar is weaker, then their exports is going to become competitive and import is going to become uncompetitive, resulting in increasing jobs and increasing manufacturing activity in USA. Now let us understand why Powell does not want rate cut. According to Fed, because of tariff, inflation can increase. Now, University of Michigan survey had done an expectation about what the entire market is expecting about inflation. According to them, inflation can increase drastically in coming days. Inflation expectation is near 6.7%, which is technically highest since 1981. Now at CR Forex, we believe that Fed will be in compulsion to go and cut interest rate in coming days. Let us understand why. US consumer confidence has fallen by 40% in last 5 months and it is near 45-year low. When US consumer confidence is at a lower level, they are going to spend less. When they are going to spend less, economy is going to grow at a lesser pace. So probably US economy has entered into a vicious cycle where growth and earnings are going to be lower for coming days. The second reason is rising unemployment. In the US employers have cut 275,000 jobs in the month of March 2025, which is highest since May 2020. And the last point is slowing US economy. Entire market is expecting that US economy will not be able to grow at 2.5%. Currently, market is expecting that the full year GDP of US will be close to 1.4%. Last month it was at 2.2%, which the market was expecting. So lower growth is also a challenge. And the last point is that market is expecting that US might enter into a recession. 45% of the analysts in Reuters survey suggested that the US economy can enter into a recession because of rising inflation, slower growth, and tariff trouble. Now, in history, in 2008 and 2020, both the times, Fed had to choose economy versus inflation. So probably 2025 can be also a year where Fed will choose economy over inflation and can go and cut the interest rate. Weaker US economy is going to give you two prominent view. First view is that US equity market is going to underperform for next couple of months. S&P 500 we are expecting that 5500 is going to act as a strong resistance, and ideally it will again move towards 4800 kind of levels. And the second aspect is weaker dollar index, which is currently trading near 99.30 kind of a level, can bounce back towards 102.50 to 103.50, but the broader view of 97 to 98 for index remains firm. Now let us discuss the outlook on rupee. There are some positive factors for rupee. For example, crude oil prices are falling. Second, dollar index is structurally on a downward trajectory. Third, Chinese currency and Japanese currencies are appreciating. On the negative side, FIIs are selling in Indian equity and debt market. In the month of April so far, they have sold close to 2.6 billion in equity market and 1.4 billion in debt market. In the month of March, debt inflows were there, but after RBI cut the interest rate, debt inflows have reduced drastically. Second concerning point is widening trade deficit. For the month of March, our trade deficit data came at 21.54 billion as compared to 14.05 billion in the month of Feb. A major concern with among trade deficit is rising trade deficit with China. Currently, with China, our trade deficit is close to 99 billion dollars for entire year of 24-25. Third point can be RBI intervention. As on 31st Jan 2025, their net selling position on the future side was close to 77 billion dollars. We are expecting that they might have bought close to 15 to 20 billion dollars. So if rupee comes near 84.80 to 85.10 kind of a level, they might intervene and buy dollars at those levels. Now let us conclude outlook on rupee and strategy for exporters and importers. So basically, because of all of the above point, we are expecting rupee to trade in a consolidation range between 84.80 to 85 on the lower side, and on the higher side we are expecting the pair can trade near 85.80 to 86 kind of levels. Exporters should sell their exposure between 85.40 to 85.80 kind of levels, while importers can increase their hedge ratio near 85.10 to 84.80 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.